Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I had a really good question that came through along with a few symbol requests, and I thought I would use the question as this week's lesson. It really was related to what is my favorite entry trigger. All right. And so I wanted to go through and explain there's 4 different entries on a pullback trade. And I'm going to explain how I use the lower time frame with this specific trigger, which is trigger 2. There's 4 different ones. I'm going to talk about the second one, which really is my favorite when I come across that. And what I want to be able to do when I'm using the lower time frame this way is reduce risk and also improve my timing. And we have to use that lower time frame for the entry this way. And we're going to use MACD and ADX to help us as well. All of this is going to help us really, I think, improve our trading process. So once we're done with that, we'll go through the individual symbol requests that came through. Okay, so for this example, I'm going to use Microsoft, and I want to zero in on this pullback here, which coincides with this pullback here. And so first thing I want to point out, just briefly on the upper time frame, because this is early. I mean, I don't typically highlight this as a pullback trade, but in reality, it does qualify because it's testing the low. We have a little bit of divergence because this is essentially a double bottom. This is making a higher low, but we have a pinch taking place, and it's counter parallel lines where these lines are going up and these lines are going down. Again, these are from my course along with the triggers I'm going to talk about. The other thing I would mention to you that has my interest here is that we have a lowering of the ADX strength. You see how the ADX has dropped down below 25? We had a divergent peak here, and then again it dropped off again, and then just failed to get above 25 on this drop. So it is intriguing the way this is playing out. Now, if we go to the smaller time frame, and the key thing to keep in mind here is, so this is the setup, but nothing happens unless we get a trigger on this time frame. Now, what I call trigger 2 is where price comes down and goes through. Almost always you'll see some form of an ABC corrective pattern, and the 18 will cross down below the 40. All right, this 18MA will cross down below the 40, and price will be below both. All right, so that's kind of like the beginning point. And then from there, we get a move inside the zone between the 18 and the 40, but it doesn't cross above the 40. So it gets above the 18, but not above the 40. You see how this got above there, got into the zone, and then it tries to make a move to the downside. All right, now there's a couple things going on here. Number one, the move to the downside, we have a 18 below the 40, and now we're going in the zone. We're trying to come out. This is supposed to be the bear move. Are the bears taking control? How strong are the bears? If the bears can get this to go to a new low, then they're pretty strong. But if they come down and they can't take out this prior low, even if they come down and test it, to me, that's a very bullish sign. And there's a couple things we can do to confirm that. Number one, look at what happened on the way up. See the move to the upside, we broke the trend line. And then on the move out of the zone to the downside, we create a 2. And we can do that by saying we definitely had a retracement somewhere in the area of about 50% of the up move, right? So we've got our 1 coming up. We've got our 2 showing up right here as we're testing, and look at what the MACD is doing. The MACD has crossed over and it's holding the signal line, which is now rising. So we're getting this situation where we have a lot more confirmation in what's taking place. We've come in the zone and we've come out, and we get an idea of what the bears got. How strong are the bears? Do they take control here? Well, they really don't, because if you look at what happens on this move, we get a move here that's pretty strong, but then a rally up and they come back down, and the red can't take out the green peak. All right, so we've got confirmation of weak sellers on the way down. We've also got a pinch play developing, basically, which, and more important to me, is the fact that it's holding the signal line, which is now rising. All right, Not only that, we have price breaking the downtrend line and holding support. So on this bar, I would be willing to be aggressive enough to say, you know what, I'm going to go ahead and get in. I don't need to wait for this to take out this prior high. I don't need to close above the 40. Now, in this instance, it came down and tested that area before taking off. But I can tell you, in a lot of cases, when you have this opportunity, they're giving you such a great opportunity, and the reason is that you know it's the 2, you know that MACD is showing signs of improvement, and we're already getting an idea of whether the bears have any strength or not. They've already tested a low. I really prefer buying stocks that have a tested low in place. So that's how I would look at this. I think if you can combine what we're seeing here with the elements of the setup on this time frame, we essentially have a 2 time frame pinch play, really. Although this did not make 2 lower highs, it's very similar to the pattern. You can definitely see this pinching in towards the signal line. So that would be my favorite trigger. I know a lot of people probably think that trigger number 1 would be my favorite, but I like this one because I don't have the potential to take 2 losses. The problem with the trade that I consider to be a trigger 1 is that you can take that trade and then it could come down one more time, have the 18 cross down below the 40, and you'd have to take the setup again. And so you have the potential of taking 2 losses. Now that doesn't happen very often, but there is the possibility of that. Whereas on trigger 2, you already know that if it doesn't work, it's probably a failed long. All right, so hopefully this helps and clarifies the question. If you're enjoying the content, hit that like button and also subscribe. In addition, my research can be found at rabilstockresearch.com. If you have an interest in starting out with a book, you can go to rabilstockresearch.com/book, and I have it on a PDF format at a discount right now. It covers trend and momentum in multiple time frames, among other things. So go ahead and take a look if you're interested. Okay, so I'm going to start out with the XLK as the first industry or index I want to look at. I do a few ETFs to start, and then I'm going to go through the symbols. And I thought, I thought the interesting thing about this was that it plays into the potential for being a number 2 entry, potentially. So we'll just have to see if XLK plays out that way. But let's just do some analysis first. So if we look at the weekly chart, we have this strong move to the upside, big, long, uninterrupted run, essentially, with a lot of confirmation from both ADX and the MACD. And then we've gotten this pullback that's caused the MACD to actually overrun the signal line, break the signal line from an extended level. See how far away we are from the 0 line. But at the same time, we've got ADX showing a lot of power and a lot of strength. Well, what I typically look at is when ADX gets this high, got up to about 60 before it turned down. In a lot of cases, you could go through with something a little bit more extensive in terms of a corrective pattern. So it doesn't necessarily mean we have to go and take off right away. It could come down and break this moving average and set itself up to go higher later on. It doesn't have to happen right away. Now, the way I key on this is I watch what happens with the MACD and I watch what happens with the price. So we should, in most cases, when these two are giving us different signals, when this crosses over, I tend to think we're going to rally up to about the midpoint of this decline. So you take the midpoint of that, we probably right in that range, and then we come back down and we test this area. Now, you could just come down and test the 18 and then turn right back above. You could come down and kind of undercut the 18, have it flatten out. And if that happens and we test this low or even undercut this low a little bit, then we need to take out this high to really get things going again. But what I like to do is go to the daily chart at this point and look at the way this is playing out. We had the 18 cross down below the 40. Price was below both, and now we've rallied up into the zone. And right now, as of today's action, which is about 10 o'clock this morning, is when I'm doing this. I would say, we're below the 40 and above the 18. So, the possibility is that we could come and actually give a potential trigger too, where we come down out of the zone and test this low out. Now, if the bears are really strong, they'll send this to a new low, and MACD will probably show some divergence, but we will likely get the red DI going here and cause this to look like it's going to take a longer time. It's going to be a longer process of turning things around. If we come down and hold this low in some way, shape, or form, either come down lower or just barely come down in the form of a pinch and then turn back up, then I think we have to be ready if we take out this high somewhere down the road in another week or two. So that's kind of how I would be looking at this right now. We're still in a decent upward trend. There's still pretty good momentum in place. The question all becomes of whether this triggers to the upside in some form of a higher low and then a higher high. So that's kind of what I'd be watching. We can obviously see what's going on the hourly chart today. You see how it gapped and just crapped up. It just gave it all up. It opened right at the high and it's been going down ever since. So now that we've closed that gap, and we've basically gotten to a break even, how it reacts here will be pretty important, I think, for the day. So if we turn negative, then we could be heading all the way down to the 18 on the hourly. If we can hold here, we could end up just kind of forming a little bit of a range between 171 and 173. But let's see how this plays out over the next few days and see if it wants to set up as a trigger too. Okay, let's go on to the USO. I had this request come in, and I did want to take a look at this. Let's start with the monthly chart because we have this key bottom from a while back that we're essentially getting back above and now coming back and testing. All right. Notice what else is going on. The MACD was strong enough on the rally side that during this pullback, it's holding zero. You see how that, even though it's down below the signal, it is holding the zero line. So we've got that kind of going for us. Like there's signs of improvement, signs of potential. Now, again, the key time frame here ends up being the weekly chart, and the way this is developing, we're crossing through this downtrend line. We're getting improvement on a MACD basis. We've got a little bit of improvement on a green DI basis. But one of the things I've been saying to my subscribers for energy is I really wanted a pullback. We're getting this pullback, and why do I want that? Well, let's look at this RSI. So here's the RSI at the bottom. RSI 5 is the gray line. RSI 20 is the red line. This dotted line going across is a 50 level. And what I like to look for is when the gray line comes down below 50 and works off an overbought condition and gets into kind of neutral to oversold territory while the red line holds above 50. All right, because the red line is telling us how strong the trend is. The gray line's giving us an overbought, oversold reading. So if you go back and look at the examples, look at this. This is where the gray line dropped down below 50 and the red line held above. Look at this. Gray line comes all the way down under 30 and the red line holds the 50 level. Again, red line holds the 50 level, gray line comes down under 30. These are going to be phenomenal opportunities when you can find these. These will be great, great trading opportunities. Now, one of the things I notice at peaks is when we make these moves to the upside and RSI 20 gets over 70, we want to be on the lookout during a pullback. And if you notice on this pullback, we did not get the gray line down to oversold. So you kind of get a wave down, but you don't work to neutral. You don't get this down below the 50 line, and then you make another push to the upside, and we get divergence. You see how the red is making a lower peak, and both of those peaks are at or above the 70 level. I view that as a big negative. That's kind of what I'm looking out for some kind of a reversal. Now we've gotten the reversal, and if you notice, red DI has not been able to hold or get above the 50 level until here. Now we're clearly above, and now the question becomes on a pullback, can it hold? So if we can get a little dip here and pull back and turn back to the upside while red holds, we have our first up signal of since July of last year, essentially. Well, actually, it really crossed down. Yeah, sometime July, August is when this crossed back down to the downside, and it never really recovered until now. So I'd study this RSI signal. I have it in my course. I think it's a really helpful tool sometimes when you're trying to determine whether the trend is shifting back to the upside for real, because sometimes there is some lag with the ADX. All right. So if we can get a pullback here and turn back up in the form of a higher low, I think that would be very bullish for this USO. All right, let's look at this is the uranium. If you go and look at some of the individual stocks that are components of this, we're starting to see this percolate. There's some stocks actually showing some real signs of interest in terms of turning back to the upside. But I wanted to point this out. We had the strong move to the upside, and now we've worked our way back down. And look at the strength of this move. Do you see the power behind this move? The ADX reached 45, 50, something like that. And we've gone through this consolidation pattern, and notice how the 18 MA is flat, but we've got this really strong blue line, this 40-month moving average. And if you notice, the MACD has kind of worked its way back down towards zero. So when I see that, I get really intrigued. We have a zero line reversal potential on this time frame, and then look at the way this played out on the weekly. The weekly came down, got above, and instead of like this, where it crossed above and then just immediately dropped back down, and this dropped back down, this went above and then pinched. Do you see how we got a pinch play here? And it triggered to the upside about, somewhere early July, first, second week of July, and has been kind of working its way back to the upside. Now, I think the other key thing that's taking place right now is we're breaking out above 23 for the first time. It's a low ADX breakout on the daily chart. So I'd love to see this come back and check back to 23 and then turn back to the upside and form a little higher low there to confirm. But generally speaking, when I look at the bigger picture, there's a lot of positives that are taking place here. I think this is something that is evolving into a very bullish pattern. All right, let's start getting into some of the symbols. So we got this harsh pullback, which we were looking for. If we look at the weekly chart, it crossed above in a breakout format here with really strong volume, but we haven't had a pullback to the 18 until now. But look at this massive red bar. The massive red bar, the midpoint of that should act as resistance in the near term, and you can see the volume associated with that big down bar. So this probably takes a little bit of time. I wouldn't expect it to go tearing right back up to the upside. We have confirmation of that based on the fact that the MACD has come down below the zero line. Both of these lines have clearly dropped down below zero. And whenever I see that, I'm looking for a test here and then for this to come back down and test this low. And then turn back up potentially, right? So you don't have to turn, like the first turn back up in MACD, crossing back above the signal line. In this instance, I would not consider it a buy signal. I would not be looking for that. I wouldn't be looking for the first buy crossing back above the moving averages. I think it's too early. When this comes down this hard like this, you normally get some form of a double bottom. Now, what that'll do sometimes is completely prevent you from getting in a trade that is ultimately going to rally up and then just break the 18. This could rally up and just come right back down and break through the 18 MA. And so if that happens, then it's probably working its way back to the 18 month, and this is going to take several months to really get itself going again. All right, let's look at Dash, D-A-S-H. So here's the question, and I want to answer it in a different way. So the question was, what's the target on this? I think he was saying maybe 120 as a potential target in this trade. So let's start with the trade elements. First, we get a move to the upside. We get confirmation here, a lot of strength to the upside here, and now we've pulled back to a rising 18 above a rising 40. Okay, this is the pullback trade. This is what we look for. Now, he brings up the point of this getting really almost overdone or gone too far, and I kind of agree with that. I prefer to see pullbacks below the 50 level. When they're just going to hold like this and turn and go again. When they get over 50, usually it's something a little bit more complex that has to take place. But let's assume that this 18 wants to hold. Then we go to the other element, which is the lower time frame, which is exactly what we've been talking about on the lesson today. And we have overrun on this time frame. We've got a little bit of strength in the sellers. You see how this blue line is crossing above 25 based on the red, based on the sellers? So based on both of those, I am not expecting this to turn on a dime. I'm also not looking for any kind of a quick reversal if the MACD crosses above. I'm waiting for this to come up and then come back down and make some kind of a test of this area whenever that happens. I want more confirmation of a reversal. So I want to see something take place that has some complexity to it rather than just turning up and turning back to the upside. So I'm really expecting that. Now, if we can get that, if we can get a strong move up and then hold on a pullback and turn back to the upside, then we have a potential trade on our hands. In terms of the target, because the 18-month is declining like this, then this trade is not based on the monthly. The monthly is just saying there's no real interference to this trade if I want to do it off the weekly and the daily. I can do the trade. I can do it off the weekly and trigger it off the daily. But I can't do it based on the monthly because there's no setup on this time frame. So then I want to look at it and say, I can play this with daily risk, and I would probably be targeting for like 100. I probably wouldn't be targeting for 120. And my reason is this is really where it broke down from, right around 100. The thing is that 100 is not where I'm going to exit the whole trade. I'm going to get in with good enough risk so that I can scale out along the way. If it wants to go to 120, I'm going to benefit in partial position for that. But I need to be able to take profits by the time it gets to 100. If that's the way it's set up, I can't get in and out by the time we get to 100, then it really isn't a good trade. But in this case, we clearly should be able to enter and exit by the time we get to 100 and get at least 2 times what we risk. So that would be the minimum criteria. Okay, let's get through some other symbols here. So AR has rallied up to the 18-month. It doesn't have a lot of strength in terms of the rally here compared to the sellers, but I kind of view this as a climax low. I think this is a climax bottom, so I wouldn't expect this to show that kind of strength to the upside. Now, the fact that this is coming back to here, I do think is troubling. I do think it could pull back, but I don't really view this as a short trade. It just doesn't hit me that way. I see the elements of what you're talking about. I just think you'd have to be a little bit more nimble. I think there's too much support around 25. I kind of expect this to form some kind of a trading range in here where there are elements where if you played it off of really small time frames, you could probably play it and profitably successfully play it. But I don't know that I'd really be all that interested in doing that. I just don't like, there's really, so you've got a rising 18 month, you've got a rising 18 week, and this is just turning down. I don't really have any trade set up that I'd be looking for. Okay, look at Intuitive Surgical. So we have 2 elements of this trade. First side is the strength to the upside. This meets all the criteria to the upside. Very good strength. But then look at the decline phase. You see how strong the decline is? It's a very violent decline, went right through the 18, and now the 18 is rolling over. We know we've got strength because look at the reading on the ADX daily. I'll just take a zero in on this. Look at the strength of this sell-off. So when I see that, and this sell-off is stronger than these rallies going up here, I'm inclined to believe that this is going to take a long time. That, in fact, we're probably coming all the way back to the 18-month. I wouldn't be in a big hurry on this thing. Okay, look at SRPT. So we're sitting on the 18-month and the 40-month. The decline phase has no real strength. It's sitting on 100. I mean, if I wanted to play this, I could do it, but I would look for this to come back down and test this area because we're going to probably fail in some way, shape, or form at the 18, come back down, and then we can look for a daily signal. Don't look for a daily signal when we're rallying into a declining 18 now, right? If you're going to do that, you have to do that way down here. If you're going to do a signal off the daily chart, let it come up into the zone, come down, and now we have the potential to set up a trigger and we can get our entry off of the daily from there. That's when you want to be aggressive. I hope this makes sense to the person that asked, but we're sitting at a pretty key level. We do have a lot of support at 100. I just want to see this pull back one more time. Okay, look at JOBY, another one where the pullback is pretty severe. We've kind of erased this big green bar with this pullback. And look at the overrun in MACD. So what happens when this when we have strength here and we have overrun here? I'm expecting a move up and then this to come back down, and then we can evaluate it after that happens. But I wouldn't get caught up in this first move. Let's make this do something like that before looking at it, just based on how deep the retracement was. Okay, look at CRM. We have a pretty good consolidation taking place. I think this wants to take more time. I don't think I'd be in a big hurry in the way this broke out and failed and now has rebroken the 18 and the 18 is rolling over. Look for this to consolidate a little bit more. I think it's going to come down and test 200 again. I like Merck on a bigger picture pattern, but I do think it wants to come back and test 105 again. I don't think it's ready. We have a reverse divergence developing here, right? This is making higher bottoms and this is making a lower bottom. So the potential is there, but look, we have a declining 18 week. So you either have to bust through that and then buy the first low, or you have to fail here, come back down, and then turn back to the upside. Thanks for watching. My research can be found at rabilstockresearch.com, and my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.